Mark Douglas, Trading in the Zone, Master the Market with Confidence, Discipline, and a Winning Attitude. Dive into the world of trading with Trading in the Zone, Master the Market with Confidence, Discipline, and a Winning Attitude, by Mark Douglas. This book helps you dissect the intricacies of trading by exploring the shift in focus from fundamental analysis to technical analysis. Unravel the importance of personal analysis and focusing on attitudes towards the market as the single differentiator between winners and losers. Learn the keys to success, discipline, and focus, and understand the significance of cultivating the right mindset to tackle the unpredictable nature of the market. Finally, get introduced to the concept of probabilities and the importance of relinquishing control over individual trade outcomes, leading to lasting success in trading.
The shift to technical analysis. In the past, fundamental analysis was the go-to strategy for professional traders. However, technical analysis has now taken over as it allows traders to make more money. Technical analysis focuses on patterns and predictable behaviors in the market that can be exploited for profit. Meanwhile, trading errors often stem from psychological attitudes towards loss and missing opportunities. Winning attitude for trading. Technical analysis is not enough to win the trading game, a winning attitude is vital. Trading is a zero-sum game where for every dollar gained, a dollar is lost. Hence, the difference between winners and losers depends on their mindset. Properly grounded traders embrace the market's uncertainty and move on to the next trade without dwelling on losses. In contrast, average traders are motivated by competition with the market, leading to emotional attachment and validation-seeking behavior. Consequently, they hold on to losing trades and cash in winners prematurely, resulting in more losses and fewer wins. The author advocates for a detached, objective approach to trading, where traders acknowledge losses as part of the game. In summary, trading is more about attitude than analysis. Discipline, focus, and acceptance. To be successful in trading, one needs to have discipline and focus, and to accept the risks involved. The key to success is having the right mindset. Successful traders are able to remain confident in adverse conditions because they are disciplined and focus on the big picture. They are less susceptible to fears that plague the average investor. Trading is inherently risky, and the belief that taking risks classifies one as a risk taker is a fundamental misconception. Acceptance of risk is the most important skill a trader can learn. Traders need to adjust their attitudes and beliefs about trading to minimize fear without becoming reckless. The best traders aren't afraid. The difference between successful and average traders lies in their attitude towards trading. Successful traders are mentally flexible and unafraid, with no emotional attachments to trades. They have a positive winning attitude that sets them up for success. On the other hand, average traders live in fear of being wrong, losing money, missing out, and leaving money on the table. These fears lead to immobilization and inability to see opportunities objectively. The source of these fears is not the market but the trader's attitude towards it and towards life in general. Successful traders have evolved to believe that anything can happen and can tap into the collective consciousness of the market to anticipate changes. The addictive nature of random rewards. Discover the fascinating and dangerous effects of random rewards on monkey behavior and how it relates to self-discipline. Studies have shown that monkeys will repeat a task in hopes of receiving a reward, even if the reward is not guaranteed. This behavior is similar to addiction and can lead to financial disaster when trading in the market. Self-discipline is not an inborn trait, but rather a technique to create a new mental framework, making it essential to avoid the trap of random rewards. Take responsibility for trading success. Trading success is largely a function of mental discipline and focused action. The market is an arena where people interact to extract money from each other, and it is neither good nor bad. Profitable traders develop mental patterns that generate consistency and positively reinforce profitable behavior. Success comes from the trader's ability to respond to information from the market, not from the market itself. Traders understand that trading is a probability game and that individual outcomes are not as important as the big picture. To achieve success, responsibility, focus, and discipline are essential. The art of trading. Trading is a game of numbers and pattern recognition where successful traders properly manage their expectations. Knowing too much may lessen your success rate. To achieve consistency, a trader must integrate consistent beliefs and be willing to give up other motivations, agendas, and reasons for trading. A trader must advance through mechanical, subjective, and intuitive stages, where mechanical trading involves executing a trading system flawlessly. Subjective trading entails applying market knowledge while being responsible for your decisions, and the intuitive phase requires relying on experience to steer a probability-driven system to positive results. The best traders seamlessly anticipate and react to market changes without conscious thought.
As we conclude our journey with A Trading in the Zone, it is evident that the key to successful trading lies in mastering one's mindset and embracing uncertainty. Develop a strong foundation by understanding the importance of personal analysis, focusing on behavioral patterns, and cultivating a winning attitude. Recognize and overcome the common fears that hinder traders, such as being wrong, losing money, missing out, and leaving money on the table. Implement the 5 fundamental truths about trading to create a probability-driven approach, and finally, progress from the mechanical to the subjective and intuitive levels of trading. Remember that consistent success in trading can only be achieved by taking complete responsibility for your decisions and results, and maintaining discipline throughout the journey.